much anticipated APTOS launch has sent the project rocketing to a market cap of $8 billion fully diluted already. Is this project, a brand new project, better than FANTOM or KADENA? In this video, we're going to compare the projects and break down which has the better risk to reward profile. Where are you getting the best bang for your buck? The APTOS price has gone absolutely crazy on initial launch here. This is now available to trade on most major exchanges. Check out Bybit, links in the description for some amazing bonuses, but do not do so until you've watched this video. You can see the price climbed up really high here, making a big move up towards $12.7, now calling off at around that $8 mark. But what that means is you're sitting at a market cap fully diluted of $8 billion. We're going to compare this to see which is the better project. We're also going to look at the Bitcoin charts. Loads going on today. Smash up the like. Don't forget to subscribe. If you want to buy any tokens, you can do so using the links in the description to Bybit or BITGET. Take advantage of those amazing bonuses. We want to compare this project to the likes of FANTOM and KADENA. As you guys know, FANTOM particularly is one of those projects where I look at it and say, how does it go under the radar? And yes, it's a small market project. Yes, but many people can say it's very risky. But when I look at projects like APTOS getting all this attention, I cannot help but realize and wonder why certain projects get so much hype, get such attention, get listed on all the major exchanges first. And we know the answer. Based on who has vested interest. It's based on who are the early investors. In the case of APTOS, you know it's ex-Facebook Meta employees. You know the likes of Sam Bankman-Fried over at FTX and Alameda Research are in the project. You know A16Z with Andreessen Horowitz are in the project. And therefore, there's no surprise that you see these massive moves. But if there's one thing my time in traditional finance has taught me, the benefit of the institutions is always at the peril of us retail guys. It's us who end up left holding the bag. And that's my biggest warning for all of you today. If you are trading this move, feel free to trade it. Take advantage of the volatility. That is always what I do when I see these new token launches. I want to play the game just like these big boys are playing the game. But at the same time, I will not be left holding the bags which they're trying to dump on us when they have pre-sales and buying at crazy low valuations compared to the 8 billion valuation you're buying APTOS in today. So let me give this as a comparison. If you're new and you don't understand tokenomics, we're going to try to break this down in as simple methodology as possible. So let's take a look at APTOS. Currently, it's sitting at a market cap of about 1 billion. So when you look at it on the service, if you go to CoinMarketCap, you can go to CoinGecko, this number will be fluctuating quite a lot. They've just launched. But you can see that they're sitting at a market cap of 1 billion. But they're fully diluted is closer to 8 billion. Now, what does this mean? What this means is currently, of the 1 billion tokens of APTOS written in the smart contract, only 130 million are circulating. So only 13% of the coins are currently circulating. That's what gives it a fully diluted market cap of 8 billion. So anybody buying in right now, if all coins are in circulation and there was no burning assumed, you are buying today at an 8 billion fully diluted market cap. Very important to understand that. Let's now compare that to FANTOM. FANTOM is sitting at a market cap today in the bear market of 520 million. Okay, that's a fully diluted market cap of 650 million. In other words, APTOS on launch day has a fully diluted market cap close to around 14-15 times that of FANTOM. FANTOM only has 80% circulating supply, so you're not going to have that downwards pressure of loads of FANTOM tokens being released and putting downward pressure on the price. You will be getting that with APTOS, and I'm going to share the release schedule with you shortly. Let's also look at the KADENA, sitting at 250 million in market cap, but a fully diluted of 1.2 billion. Still 5-6 times smaller than APTOS on launch day. Okay, circulating supply also low, 20%. Okay, now we want to look at the transactions per second. Theoretically, APTOS said they're going to achieve loads of transactions per second. We cannot take just the theoretical limit. If you head onto the APTOS Explorer and you go back, what you want to see here is the actual transactions per second now is 30 transactions per second. That's very, very low, guys, considering they're saying they want to be in the hundreds of thousands and a Solana killer, right? They're nowhere near. Now, if you look at FANTOM, we know that they've managed, well, back in 2019, they were doing 500 transactions per second, even when the tech was very native. Now, then in 2020, they did 10K in testnet. Now the theoretical limit is about 20K, but comfortably, they do 7-8K transactions per second, okay? So you can see it's a completely different league to what APTOS is doing now. Now, obviously, we have to give it the benefit of doubt. We have to let APTOS get some time to get on their feet and see if this transaction per second scales. That's going to be the key for APTOS. Does it scale? KADENA, they're sitting here saying they can now achieve 480,000 given the number of the subchains that they've managed to create now, doubling up from 10 to 20. So you can therefore get a good comparison of how expensive APTOS is right now. And that is why I am sitting out of this one right now. I am not loading up. I'm more than happy to load up more on FANTOM and KADENA to build out a little bit of my portfolio. But APTOS is not something I'm ready to jump in with 2 feet. That doesn't mean I won't trade the volatility. I love trading volatility. Whether it's Lunar Classic, whether it's this kind of thing, when there's hype behind a certain project, you're going to see big moves. I mean, look at this. I mean, especially when you're trading on spot, the amount of big moves you're getting here. I mean, just that dump down there to the bottom from top, that's a 40% move, right? You've had a 40% move there. So those of you who don't want to trade high leverage and want to do it on spot, you're going to get some really good movement here in the volatility of this. And remember, Bybit, 0 fees on spot. But be very, very careful. People will be looking to offload their bags, and that is why I want to spend some time initially here on the tokenomics. And before, this was almost like a secret. The community had to fight for this, had to ask, what are the tokenomics? They were going headfirst into a launch, and they weren't even sharing the tokenomics. So now we've got some sight of the tokenomics. The mainnet was launched about 7 days ago, October the 12th, and we can see that 50% goes to community, 51%. Fine. Core contributors get 19%. Okay, a little bit high, but core contributors get 19%, foundations get 16.5%, and the early investors, which is the likes of Alamedas, FTX, A16Z, all the other guys that are in there, 13.48%. Okay, fine, we can accept that. That is what it is. Then we want to look at the release schedule. And again, this isn't meant to be a deep dive tokenomics. I'll probably do more of a deep dive of the tokenomics once we get more data and it's a little bit clearer. Then you want to look at the release schedule. And this is really important. Anytime you look at the tokenomics of a project, look at when is the rest of the circulating supply coming into the market. We know 13% is in the market. When is the other 87% going to come into the market? That's what we want to know. Is if you look at the blue is for the investors. So the investors cannot start escaping until 2023 November. So they've got a decent cliff there of about a year, and then they have to vest for from 2023 all the way across, okay, to 2032. So you do have a 10-year period here. You can also see what's happening in terms of staking rewards, okay? Now you can see the staking rewards start from day one. And this is where people are getting confused. People are saying, oh yeah, but they're having to vest for at least a year, so they're not going to dump. Here's the thing. You've got to look at this bit here. All investors and current core contributors, so investors and current core contributors. Investors got 13.4%, core contributors got 20%. So that's 34, 35%. So all of them are subject to a 4-year lockup. So you've seen that, I just shared that with you. Excluding staking rewards, if applicable, from mainnet launch that unlocks. And this is where things are a little bit unclear. So they can dump their staking rewards. So they can be downward sell pressure. To what extent? I don't know. We don't know yet. We don't know what those staking rewards are going to look like. Let me know in the comments if you figured it out. And therefore, we don't know what kind of sell pressure this is. But this is one of the reasons I'm staying away from building a position on my portfolio. 1, from a tech perspective, I'm not convinced. 2, from a tokenomics perspective, it just kind of yearns for a little bit more information. And when I look at other projects, like I just shared with you, the likes of FANTOM and KADENA, who maybe don't have the same backing, particularly FANTOM, doesn't have the same VC names pushing it to say, oh, look, this is a great project. I just look at the total value locked. I look to what they did during the bull market. I look at the growth. I look at the technology holding its own. And I go, hang on a second. You know, you cannot compare these. There is no way you can explain to me how an APTOS today on launch day, when it's doing 28 transactions per second, is 15, 16 times the value of a FANTOM. For all of FANTOM's failings, for all of the risks involved, APTOS have many more risks. It's still launch day. We don't even know information, let alone having a running blockchain with total value locked, with an ecosystem being built. And I've seen some screenshots of APTOS's ecosystem. I don't believe it. I've never even heard of any of those projects. If you have, let me know, right? It's still how can they have such a big ecosystem? I've seen that going around Twitter. Like, that is absolutely insane. So that's where I sit on that. Now, let's go take a look at Bitcoin. What is going on here on Bitcoin? As you can see here on the 4-hourly chart, we are getting the rejection as expected. Remember, this was the key level, and I did say, do not fall for the wick, and we got exactly that wick, right? If I posted the video yesterday, is Bitcoin going to break? Do not trade until you watch this. And the reason I wanted to share that with you is, and I said it, you can go watch the video, wait for this. Wait for a clear breakout with volume. We got neither. We didn't get the candle close above the trend. Okay, you can see we wicked back down and finished the day weak yesterday. And also, the volume was pitiful. That was my word yesterday. I said it's pitiful. And indeed, it was pitiful. We're getting the rejection. And now we're looking to come back down to the bottom of this channel at 18,800. Great opportunity to come DCA back into this level. And also be wary of a potential breakdown thereafter. So this triangle is critical. There's no two ways about it. What I'm looking for is if we do get, I don't want people to get confused on what my narrative is here is, because it's very clear. It's very clear in my mind, and hopefully I can narrate that to you. The bears continue to be in control. The bears are in control of this trend, and I'm fully expecting the next move to the downside. Now, I've made this very clear to you guys by going back to 2018 bear market, and I showed you the exact same descending triangle, and I showed you it fell to the bear market lows. And that is what I'm looking to play out here. I'm expecting a Bitcoin breakdown to 14,000 at some point. What I'm arguing is if we can break this triangle to the upside, we can get a little bit of a relief rally back up here. Now, that doesn't mean I think we're just going to suddenly go into a bull market from there. I'm just being aware of the possibility of breaking this triangle to the upside. I cannot deny that. Okay. Still, my bias tends to be to the downside, and I want to monitor that very, very closely. So for now, I'm looking for this level to come back down to that 18,000 level. If you want to see it in a bit of a different format, let's head down to the 4-hourly chart here, and you can see we got rejected exactly from the top of the triangle here as expected. But on the second leg back up, look what we formed. This is critical, guys. You've got a high there, you've got a lower high. And what have we just posted? Another lower high. We are downtrending now. Very, very clear that we are downtrending. Our bullish momentum is getting weaker and weaker here, and therefore we have to expect that we're going to come back to this green line at 18,700. But can we hold it yet again? How many times are we going to rely on this line get us out of trouble? Look how many times going back into June. So what I'm expecting is us to come to that line. If we cannot hold this green line, we could be heading to that 17,600 level. And I hate to be a stuck record, but I just feel like we have to go test the resilience of that 17,600. We fell to it, and people bought the dip, and we've held at 18,700 since then. Not gone and tested how solid the bottom of this is. Ever since breaking this blue trend here, we've not gone down to test that June low. S&P's tested the June low. Altcoins have tested their June lows and gone lower. Nasdaq has tested its June lows. But Bitcoin always held above it, which is very, very interesting. So at some point, will it flush down to test the strength of the bulls who are holding, the long-term holders? Will it go and test those hands on the break to the downside? Now, important to notice, what is causing this downward move on Bitcoin? Very straightforward. Take a look at the Dixie. The Dixie's moving. It's having a very strong day. What is going on? And more importantly, can this sustain? Well, the good news we had from Dixie is we're getting lower highs. Okay, we have got a high here and we've got a lower high. But also, we have to note that it is building some strength here from its daily EMA ribbon. And this is what I warned of yesterday. Guys, do not get excited when you see that the dollar index is running into its EMA ribbon. Yes, Bitcoin can do well while it's doing that. But every other time, the dollar index has shown really good strength to the upside. So we've got to give it the benefit of the doubt and look for this. Now, the only good news we have on our side is this, the lower high here. That's good news, okay? And so we don't want to underestimate that. That's good. But if dollar index goes and posts a higher high now, that's all going to be forgotten and it'll be back on its upward trend. Now, why is the dollar index doing well today? I'm going to explain. Remember, the dollar index cares about what the euro and GBP is doing. And the GBP is falling today, close to 1% down today. Now, why is it falling? Because of inflation. The UK inflation rate just peaked again, okay? In July, it was 10.1%. Last month, it came down to 9.9%. So, okay, it's coming down. This month, in September, it went back up again to 10.1%. Here's the visual. It was high, came down. Okay, good. Maybe the rate takes are taking impact. Nope, it's gone back up. So the GBP is falling. That is leading the dollar index to have a positive day. That creates positive momentum for the US 10-year government bond, which is moving nicely. Therefore, risk-off day, and Bitcoin is moving to the downside. But that doesn't account for one thing. And that one thing is what I'm seeing here in the pre-market. Because our pre-market eyes just caught up. When I started this video, the pre-market was green, and it just did not make sense. But now we're seeing it rotate across. It's rotating across into the red, which is fully as I would expect, because you've got the US 10-year high, you've got the dollar index high. That would suggest risk-off, which would suggest a red day in the market. But this could flip-flop, okay? We've got some major earnings coming out throughout this week. We had Netflix yesterday after the close. They beat on earnings. And Netflix is a good canary in the coal mine. It's going to make a lot of stocks feel quite confident that the earnings of the other stocks like Tesla and other tech companies could do well as well. And we got Tesla after the close today. We got Procter & Gamble before the open. So loads of interesting earnings coming this week and loads of Fed officials speaking as well. So there you have it, guys. That is my thoughts on Aptos versus the likes of FANTOM and KADENA. Let me know your thoughts. Are you going to be trading this move? Do you believe in Aptos in the long run? Do you think it's overhyped, or do you think it's getting a load of unnecessary stick? One thing is for sure, they've managed to capture the attention of everybody. Now the question is, what is going to happen to the price action? Make sure you stay safe out there. Do not FOMO into anything. Stay pragmatic, stay rational, stay logical. Don't forget to take time to educate yourself. Really, really important. If you haven't taken my free Skillshare course, take it. Link's in the description. I put my course on there for free, so you guys don't have to pay a penny to learn my TA course. This will cost you thousands of dollars, guys, but I've put it there for free. Please make sure go take time, sign up for free, watch it, take notes. That way you're going to know what is an EMA ribbon, what is a Fibonacci retracement, what is a head and shoulders pattern, how do I trade it, what are candlesticks, and how do I look at price action, how do I use the RSI. There's so much in there, guys, from my 10 years of experience going all the way back in traditional finance. So definitely take the time to learn that for free. I guarantee if I charge for it, loads more people will be taking it seriously. But just because it's available for free, people are going to procrastinate and not learn it. So maybe one day I'm going to take it off from being free to definitely take advantage and use it. Links in description to the Skillshare course. Don't forget to watch this video here, and I'll see you in the next one.